I'm Yahoo Finance Executive Editor Brian Sozzi, and taking a look at a live shot of the opening bells on Wall Street on this summer Wednesday morning. Ambique Micro ringing the bell at the New York Stock Exchange. The Go Project, an educational nonprofit, getting things popping over there at the NASDAQ in Times Square. It's Federal Reserve interest rate decision day with a side of earnings season madness. Federal Reserve is widely expected to leave interest rates unchanged at its meeting today. Fed Chair Jerome Powell, under tough scrutiny from President Trump, who's demanding rate cuts, will undertake arguably his most important press conference leading the institution with reporters after the Fed decision. Sprinkling earnings results from Microsoft and Meta after the close, and it's shaping up to be quite the day in markets. Now, Opening Bid is all about serving up investing analysis you need to know to unleash the power of your portfolio. We're digging into what's really moving stocks, giving you the unbeatable context to make decisions with all that money in your portfolio. Let's check in and see what's moving or what areas are hot or not in the markets ahead of this Fed decision. Brooke DePalma is at the NASDAQ for us. Brooke.
Good morning, Brian. Markets opening roughly flat here as investors really tried to digest a few key things that are happening. One, President Trump announced that a deal has been reached with India to put in a 25% tariff. In addition to that, we are expected to hear from the Federal Reserve meeting today that they do intend to hold rates steady there. Also, we heard that GDP grew about 3% in the second quarter. But as we make way into the day, you do see the NASDAQ moving up about 0.2% as Meta and Microsoft are set to report after today's market close. Now, keep in mind, Meta and Microsoft have had quite the run since those April lows. Both stocks are up more than 30%, and all eyes will be on earnings and guidance when it comes to these two key tech giants. Stuart Kaiser from Citi saying in a note this morning that the biggest immediate risk to equity markets is these large cap tech earnings. Now, I also want to take a look at the U.S. dollar that has been moving higher over these past few days as these trade deals have gone into effect. So certainly keep a lookout on that. We are seeing it up 0.6% at the open. The 10-year yields also moving higher, largely based upon the Fed meeting that once again is expected to happen this afternoon. And also keep your eye on gold. That's something we've been tracking over these past few months and really year to date as that has steadily risen because of investors seeking out a safe haven. That will be one to watch, especially as we're getting more calls on the street that gold could hit 4,000 by year end. All right, thanks so much,
Brooke. Really appreciate it. All right, to tell two stories for Starbucks in the wake of its latest earnings report. One of those stories is a coffee giant still battling through the early stages of a turnaround and sales and profits being under pressure in the process. The other story are signs that actions put into place to turn the business around are slowly starting to work. Joining me now is the leader pulling the levers on all of those actions, Starbucks Chairman and CEO Brian Niccol. Brian, always nice to see you and get some time with you here. So you called out some positive things on the earnings call last night. I think that's what the stock is taking its cue from. Transactions seem to have stabilized towards the end of the quarter. The business college campuses have been gaining momentum, sales up double digits. But my question to you is this, Brian. Why is it taking perhaps longer than expected for these positive indications and your turnaround actions to show up, I guess, more clearly in the top and bottom lines?
Yeah, hey, Brian, good to be with you. Here's what I would tell you. When I got here about 10 months ago, we said we were going to get going on this Back to Starbucks strategy, which really is founded first and foremost on resetting our operating platform. Unfortunately, I think there were some choices made before me that really set us back on our ability to create that great customer connection between our barista and customer and provide the type of customer service that the Starbucks brand, frankly, is known for and should be known for. And so that's really why we created the Green Apron service model. It's all around basically providing the right labor in store so that our partners have the right amount of time to execute the tasks that they need to execute, and then also be able to give the customer service and that connection to our customers that we want to provide. And also as a part of this, we had to bring some order to mobile order. We had to make sure that we were staffed and deployed correctly for the drive-through. Look, I'm really proud of where we are and the fact that actually during our pilot across 1,500 stores, we saw tremendous progress on both, the order to mobile order, the ability to be deployed correctly, the ability to provide the right customer service experience, which gave us the confidence to say, rather than just doing this across a couple thousand stores, we're going to put it across all our stores. And that's really what I was referencing in the call, which is, hey, that's what has us ahead of schedule, is getting the operating foundation back in place, getting back to being a world-class customer service company, and really setting up the expectation that you're going to have the ability to have the community experience you want in our cafes and the connection that you want with our baristas. And, I think with that strong foundation, it sets us up nicely then to start innovating correctly across our business, whether it's in tech, menu, or the rewards program.
Brian, your to-do list at Starbucks, it's long. You got to get the mobile ordering right. You got to bring lines down the store. You got to keep the workers happy in locations. You're also trying to reinvent what these stores look like. But at the end of the day, are the challenges deeper to overcome at Starbucks than when you first signed on?
Look, I think what's great is these challenges are all within our control. And so, and I think that's what we're demonstrating with the Green Apron Service model is, yes, there's a list of challenges that we have to take care of, but they're all things that are very much in our control. And I think if we stay focused on those key areas, we'll continue to make great progress. And that's really what you've seen. Over the last 3 quarters, we've made progress on transactions. We've made progress in our value perceptions. We've made progress on mobile order, and we're going to continue to do that. And what's next is once we get the Green Apron Service model across the business, you'll see us, start layering in the innovation that also is a part of the DNA of Starbucks. So I'm really optimistic about where we can get this business in the future. And, I think we're working on the right things and we're making progress on the right things.
Brian, I want to bring in Yahoo Finance's Brooke DePalma. She's been covering a lot of the operational and turnaround strategies that you've been working on. Brooke, I know you had some questions for Brian.
Absolutely. Brian, I'm curious what exactly the inflection point will be here. What can you tell investors on when U.S. same-store sales growth will return to positive?
Yeah, look, I think, what I was trying to share with everybody is when you get this operating model in place, what we have seen consistently is we see great progress in the morning day part, and then we also see progress throughout the balance of day. And the reason why you have both of those things happening is we're now staffed correctly with the right number of partners, deployed in the right positions to then execute that morning peak. The other thing is we're reducing the number of hours with minimum staffing. And so by reducing the number of hours of minimum staffing, we're able to provide better customer service throughout the day. And that's really what this boils down to is people want to get the experience of their Starbucks coffee every single time. And whether that experience is through the drive-through, mobile order pickup, or in the cafe, we believe those things set a really strong foundation, demonstrate the value of our company and our brand. And then obviously we're going to layer in the additional innovation like the protein platform, reinventing the bake case, this customizable energy that I'm really excited about. So I think it's the culmination of all these things that set us up for consistent, durable growth. And that's what we want to get back to doing.
Brian, I'm excited for the protein coffee, but also on the call, you were asked exactly about cup sizes. How do changes, are they coming to cup sizes, and how does this play into your overall redo of the U.S. store portfolio?
Yeah, so what I was, first of all, we're not changing anything as it relates to, the grande, the tall, the venti. That is unchanged. What I was referencing is there are certain day parts, certain occasions where it may make sense to have different cup sizes. Most recently we did the cortado, right? And you probably saw with the cortado, that comes in a short cup and it's a great drink and it provides just a different experience. So we're gonna be smart about the packaging that we provide with both the food and the drink to ensure that people get the exact right experience for what we're trying to provide to the customer.
Brian, of course, what goes into that cup is, in fact, coffee in many cases. And now coffee, the outlook for coffee prices, coffee prices have already climbed well off the canvas, and now you have potential tariffs, very high tariffs into the mix. When will the price of coffee at Starbucks be forced to go much higher because of these tariffs?
Look, here's the good news is we are very much diversified in our coffee buying, and also the guys do a great job of being smart about what we buy, when we buy, how we hedge it. And so it has minimal impact in the very near term. So we're able to be thoughtful about what we need to do going forward. So obviously, we'll continue to keep a close eye on it. It's something that is a big deal to us, and we're going to continue to make sure that we navigate it smartly.
Brian, so will you have to raise prices, and do you think Starbucks has the ability to do that?
Right now we don't have any plans to raise prices. And in the future, if we find that we need to do something like that, we'll be smart about how we increase those prices.
I do want to bring things over to China. You are looking for a strategic partner there. What is the timeline on that like? When will we hear more?
Yeah, look, I think we'll continue to keep people updated as we go through the process. I'm delighted with the interest that we've had so far. We have over 20 people or 20 partners that are interested in the business. The thing that gets me excited is the way these partners are talking about the opportunity for growth in China has me really excited and frankly validates what I believe, which is in the long term, China's going to be a big business. It's going to be a place where the Starbucks brand, I think, continues to be held in high esteem and will continue to grow with thousands more stores. So I'm delighted about the interest, and I'm also looking forward to continuing the process with these interested parties.
Brian, one of your biggest rivals there, Luckin, has now crept into a market that you're reinvesting in here in New York. Luckin stores are opening up here in New York City. What do you make of the competition? And also, what have you learned from the competition? It seems like low price and innovation is working overseas.
Yeah, look, I mean, my belief is the best way to compete is to be on your offense. And the offense for Starbucks is to provide great craft around our coffee, our drinks, our food in a great place. And fortunately for us, that great place allows for multiple access, right? It's the cafe experience if you want to stay, sit, share that community moment. It's the mobile order pickup. It's the drive-through. And obviously, we're going to continue to make sure that we've got relevant innovation, and we're going to make sure that we have the right access and the right occasions that people can experience the Starbucks brand. So, I really do believe our best way to compete is to be the best version of Starbucks. And that's what this Back to Starbucks strategy is all about, is making sure that we provide customers and partners the best version of Starbucks.
Brian, I want to go back to something I asked you at the top. I mean, clearly, at the end of the day, Starbucks is still in turnaround mode. You got a lot of work left to do here. I mean, but when Starbucks is turned around, what do the glory days look like for Starbucks? And assuming you do hit some form of new glory days for the chain, does it look like glory days of yesteryear? The Starbucks that was putting up high single-digit percentage same-store sales growth, industry-leading operating margins that were growing every single quarter. What should investors, I guess, expect to hear from you at that investor day in terms of long-term guidance?
Yeah, look, I think we talked about this on the call a little bit, which is we do believe we have the ability to get back to the performance we had pre-COVID. And we've really kind of used 2019 as kind of the guidepost of what we believe we should be back to earning from a financial standpoint. I also believe what you're going to find is the Starbucks business is going to be back leading culture, in culture. And people are going to be once again saying, hey, I want to meet you at Starbucks. And, whatever that occasion is, we're going to be relevant for that occasion. And, I do believe the work we're doing on the cost side of things while we're working on the turnaround of the operational experience, the marketing, the innovation, the cost side of this is just as important. And that's why I continue to say, when we get back to Starbucks, you're going to see a better Starbucks. And ultimately, that means I think financial performance as well as top line performance on the bottom line. So I think it all works in harmony. We know this over and over again. When you get the top line growth, good things happen on the bottom. And what we're going to ensure is that that top line growth flows to the bottom line. And I think what we've done in the past is a good indication of what we can do going forward.
Let's get that protein coffee out there, Brian. I'm down for it after the gym. Starbucks Chairman and CEO Brian Niccol, always nice to see you. Brooke DePalma, thank you for hopping on as well. Appreciate it, guys.
Yeah, thanks, guys.
All right, we'll be back with more on Opening Bid right after the break. Welcome back to Opening Bid. Trading is well underway for today. Here's what I'm watching right now. Number one, we are a few hours away from Fed Chair Jerome Powell explaining the decision on interest rates. That decision will likely see rates being left unchanged. Will Powell signal a rate cut for the Fed September meeting? If he doesn't, both markets and President Trump may have something to say about it. Number two, one consideration for the Fed today is the health of a U.S. consumer starting to feel the effects of tariffs from the Trump administration. Corporate America is also beginning to feel the effects, especially those names in the consumer space. We'll dive into all things consumer very shortly. And number three, the big tech earnings parade marches on with results out of Microsoft and Meta after the close. Netflix and Alphabet set the bar high with strong reports of their own, so Microsoft and Meta have a lot to do to please Wall Street. Lots going on. Big earnings day. My roundtable for today, Northwestern Mutual Wealth Management Company Chief Investment Officer Brent Judy and Yahoo Finance senior reporters Brooke DePalma and Inez Ferre are here as well. Brent, Fed Day is here. What do you think the market wants to hear from Powell to continue to push higher to even fresh records?
I think the market wants to see a rate cut in September. And so you look at the chance of a rate cut right now, at least priced by the market, it's around 58%. So it's a coin toss largely. I think if he signals or there is a signaling of a rate cut in December or September, I think the market would largely rally based upon that. I think it'll also be interesting to see if there are dissents. And so there's been some talk from Christopher Waller and others about the potential for voting for a rate cut in July. Will they dissent? And I think that will be key to the overall kind of narrative about what the Fed is and where their bias is towards at the September meeting.
Brent, appease me for a second. I happen to think that, of course, we're not going to get a rate cut today, but I don't think Powell's going to signal anything for the September meeting. If that happens, is that market correction worthy?
I'm not for sure. I mean, you have an insatiable appetite by retail investors to buy equities right now who have been pushing the markets higher. And this is where, I think we'll see where it goes. I think it is important to me what happens in September. And I think that's the most important discussion. Where does that percentage move? I imagine if the percentage of a rate cut increases or the market believes that will increase in September, I imagine you'll see a positive market reaction. On the other hand, if there is more of a reading of the tea leaves that there's not likely to be one or that the Fed is leaning in the opposite direction, I think that would largely cause the market maybe to pull back just a bit.
And as let me bring in here into the mix. I mean, this is a market that is seemingly craving a rate cut. We're still continuing to see wild moves in meme stocks. You have many stocks, notably in big tech, trading at 52-week highs. It wants a cut, Inez.
Yeah, it certainly wants a cut. But Sozzi, look, we used to be in an environment where when Trump mentioned tariffs, you would see the markets roll over. Not now. I mean, tariffs, 25% tariffs on India, and the market isn't even flinching. So this signals that it is looking ahead, and perhaps it's looking at a rate cut for September. It'll be interesting to see if Powell leans into that idea during the presser today. Also, as Brett was mentioning, if there's a dissent within the FOMC, and also anything that he mentions about the political pressure that he's been receiving, because we know that that presser today will be watched by many, and to see if there's any fireworks that go on, because this will be the first time that Powell speaks following that awkward encounter with President Trump last week.
Brent, let me get back to you. Inez brings up a good point on possible dissents. If we do get one or two dissents, what's your read through to that?
That the Fed is uncertain about the future, just like all the rest of us are, and that they're willing to wait, and that there is a division within the Fed. I don't know that it's a huge deal. I think the tariff commentary that just came out is really interesting because I think the market has largely shrugged these off. And I think the market believes that the president will pull back if he has to, and that's kind of the narrative that's been out there. Look, I think the risks are the same they were during the first administration. Where is that fine line where you pull back, but it's too late? And certainly in your opening commentary, you mentioned an economy that has weakened, and you are starting to see that. The GDP, yes, it was 3%, but if you peek through the data, you'll see real purchases by private domestic consumers and businesses. It's running at 1.2% quarter over quarter after 1.9 in the first quarter. These are two of the weakest readings since the end of the 2022, where we kind of had inflation and worries of economic slowdown, and then 2018. And so you are seeing a consumer that is beginning to weaken, and that's where the tariffs so far haven't even really taken hold yet, and they're being largely ate by companies. Where does that go in the future if the companies, as the Starbucks CEO was talking about, if they have to start passing these along? And that's where I think the big question is, what happens to economic growth as these tariffs take hold, and what happens on the inflation side, which maybe is an interesting conversation towards the Fed. And if someone asks that question, where do they place their chips? Is it more important on the economic growth side or more important on the inflation side if we get both of those moving in the wrong direction?
Brooke, you and I just finished talking to Starbucks Chairman and CEO Brian Niccol, and He essentially is a turnaround CEO at this point, trying to turn a company around of Starbucks' significant size while the consumer is weak, like Brent has called out. And you look at what Starbucks reported in the most recent quarter, their U.S. business transactions down 4%.
Yes, certainly. What we're seeing is this U.S. consumer who really remains very picky about where exactly they're spending their money. And we certainly saw that come from Starbucks as well. U.S. same-store sales decline down 2%, albeit a bit slower or higher of a decline than what Wall Street had anticipated. And so when you think about what the Starbucks CEO just told us, it's really about this value, this experience, this enticement to get consumers in the door, the innovation as well in terms of protein, cold foam that they're introducing, as well as, perhaps a coconut water-based tea. And so you really have to convince consumers who contribute a majority to the U.S. GDP to buy nowadays, as all this uncertainty surrounds them. And it's not just Starbucks that we heard of, pullback from. We also heard from Kraft Heinz this morning saying that consumers there are looking for affordable options. That we saw volume declines there, but it was a slower volume decline than what we saw in previous quarters. And so consumers are really just getting picky in this environment about where exactly they want to put their money.
And it's something also I heard too in terms of uncertainty. Talked to Procter & Gamble CEO yesterday, John Mueller, telling me that people are trading down from more expensive Tide to cheaper priced Gain. Not exactly a great trend or a read there on the consumer. And as we also, of course, have big tech earnings after the bell, Microsoft and Meta. And I mentioned at the open, Alphabet and Netflix, two really blowout reports, set the bar very high for both of these companies. It's going to be fascinating to see how the market reacts to each of these.
Yeah, certainly. And Microsoft, with respect to the AI play and the AI investments and what is happening with Azure and growth there. So you are going to be watching investors pay close attention to Microsoft's report, but also Meta as far as AI and superintelligence and the AI tools that Meta is using for advertising. These are the two heavyweights within big tech that have been also driving the markets higher. I mean, when we talk about these higher markets, we're looking at XLK and we're looking at XLI and XLU. So the entire build out of the data centers and AI, this AI theme, is really propelling this economy forward. I mean, we talk about the consumer on one side, but then on the other side, the entire infrastructure build out is what is driving these markets higher.
Brent, last word to you. What do you need to see from Microsoft and Meta to, I guess, keep you optimistic that the rally could be sustained here?
Look, if anyone's watching the show and those two stocks have an outsized impact on your portfolio, I encourage you to diversify. There are a lot of high expectations built into those stocks. Certainly, this is not a commentary. I'm not an individual stock analyst. But I look at small caps in the U.S. trading at the cheapest valuation relative to large caps since 2000, since June of 2000. And if you look at the 25 years since then, small caps have actually outperformed large caps, even with Microsoft and Apple and Meta and everyone else driving them higher. Valuation is not a perfect timing tool, but it does tend to work longer term. And right now, the S&P 600 is expected to grow more than the S&P 500 in the next 12 months, yet it trades at 14.6 times earnings versus 25 or 23 times earnings for the S&P 500. And so I encourage you to diversify. Think about other parts of the spectrum, and that way you don't have to worry so much about what happens with Microsoft and Meta or Google or whatever it may be, although those will drive the S&P 500, and there's a lot of high expectations already baked into those.
Big thank you to my contributors today. What a show. Really power-packed with a lot of helpful stuff. Yahoo Finance is your home today for all things Federal Reserve decision analysis. We'll continue getting you prepared for the big moment on Market Catalyst with Julie Hyman. That's straight ahead.